One of the problems that people have when they invest their money, or for that matter, when they do anything, whether it's with their marriage or their health or their money, is they most likely make statements. Why do you say that to me? Why don't you hear me? Why don't you love me? Let's just say those are the things that come with marriage, instead of saying, what did I say? Or what did I say to have you say that? Right? So, what I've noticed is when people make statements, they lead smaller lives. But when people ask questions, even if they're not that good of questions, their lives get bigger, their lives expand, right? Their net worth goes up. They have more choices, they have more security, they have more freedom. And so on my Facebook group this week, I just stirred the pot a little bit and said, what questions do you ask? Or maybe I should have said, what question should you ask before you buy something? And I then went back in and said, one of the most powerful questions to ask is, how much will you lose? Now, this is a question that angers a lot of people because it presupposes you will lose, which is true, because eventually when you sell that thing you own, you will sell it not at the very tippy top, but as it has fallen back down. So there will be a point where you lose some of what you have gained, or you will lose some of your principal. So it's a very clean question to ask. But one of my jobs is to think of the best questions to ask and what questions to ask in what order. And when you ask the most powerful questions, then you start to have a much different future that you live into. Hey everybody, this is my first weekend podcast of 2017. I have to deliberately think about the number being 17 now because that is just hurting my brain to say that. But good to have you here. Thank you for being my world. And what I kind of notice is it's the obvious, which is so difficult to see, right? It's obvious when you ask great questions that they demand clarity, they demand great answers, they demand you to look at areas of your life that you may not have looked at. And so I want to talk about what is obvious. And to me, what's most obvious, which is not easy to see, is that you can only put your money in 4 places on this planet. The moment you earn money into your life, it comes into the part of the world called currencies, right? So if you live in the US, most likely you get paid in US dollars. But even if you get paid in Bitcoin or Australian dollars or Chinese yuan or Japanese yuan or a European euro, you're getting paid and your money is going into that major asset called currencies, right? So there's only 4 major assets on the planet your money can go into: currencies, debt or bonds, companies, which most people invest in publicly traded companies, let's call that stocks, or physical assets. And physical assets, like all the other 3 assets, can be broken down. But physical assets is usually broken down into real estate or commodities. So those are the 4 sections, right? Stocks, physical assets, currencies, and bonds. That's it. It's really obvious once you hear it, but many times before you kind of break it down, you're like, I don't know. I mean, where should my money go? There's so many places it can go. It can go. No, it can only go 4 places, and it's always in one of those 4 places. So at the beginning of 2017, let's do something that's really obvious. Let's look at those 4 asset classes, and let's just look and see what they're doing, rather than predicting or coming up with some scary title to a book that I want to sell this year. Fill in your favorite Harry Dent book. But let's actually do the obvious here, right? Let's do something, and maybe it's so obvious it's difficult for people to see. So let's start this off. The largest real estate market in the world is U.S. housing. Now, I could have picked oil because oil is the largest traded and most traded commodity on the planet, and it's more aligned to everyone on the planet, but most people don't trade oil. I understand that not all my viewers and listeners are in the U.S., but about 70% of them, or about 2/3 of them, are. So let's look at this. This is U.S. housing, and this is U.S. housing adjusted for inflation. So as you can see, it peaked in the year 2006, and it bottomed in the year 2012. Now, I want to make a couple points about this. One, before it bottomed, I said, it came out of my mouth, real estate is not a good place for you to be in. It could end up going sideways for many, many years. At the same time, I said, And I said this way back in, I think, 2007. I said, look, historically, we're probably going to be bottoming somewhere in 2012. But look, guys, a lot can happen. When 2012, in fact, it was June of 2012, I said, look, I believe real estate has bottomed. Now, this angered some people because they said, RC, but you said it would be flat. I said, yes, I'm changing my mind. I think it has now bottomed. One thing humans hate doing is once they believe in something, it becomes like a religiosity to them, right? That becomes their religion. Gold's going to go to zero. Gold's going to go to 10,000. The Dow's going to go to 5,000. The Dow's going to go to 50,000. And people get behind what they already believe. And I have angered people over my almost 20 years of helping people with money when I change my opinion. And my job is to be agnostic. I believe my job is to be agnostic. But it bothers people when my position changes. Now, my position changes not because of the direction the wind is blowing, but because of what major direction the price of whatever I'm looking at is moving. And so I changed my opinion in June of 2012. That was one of the things I wanted to make by looking at this chart point. The other thing is, look where it is today. Now, it is here. Now, if you're not looking at this or if you're in the car, it's about halfway back up to where it was in 2006. Guys, that's only halfway. It can go a lot higher. And remember, now the price chart you're looking at is adjusted for inflation. Getting a 30-year fully amortized loan in 2006 was much more expensive than getting a 30-year fully amortized loan today on a house. So it is cheaper to buy that house today, and we're not even back to the prices of 2006. Now, this is a price chart being adjusted by CPI, so it's showing you and reflecting a little bit of how much cheaper housing is today because it's taking into account borrowing costs. But first, let's look at one of the major asset classes, which is real estate or physical assets, and it is going higher and it has a lot more room to run. So that's number one. Number two, the bond asset class. We're going to look at the biggest bond market on the planet, which also happens to be the US. This is the US bond price, the 30-year bond price, and this is a 2-decade price chart. And as your brain can see, it is still in an uptrend. Yes, at the very kind of the nearest part or the most recent part of this uptrend, there's been a very nice correction, which it could continue correcting back down here. It doesn't have to necessarily, but the price direction of at least the 30-year bond is clearly in the up direction. Right now, I could bring up a 10-year price chart, which I've done before, which is still in an upward trend, but the 10-year price chart has also kind of this secondary trend, which is sideways. It's been going sideways for 5 years, but it's still within that uptrend. So the first major asset class we looked at was real estate. It is going higher. The second major asset class on the planet is bonds, and we're looking at the largest bond market on the planet. Yes, if you're in Europe or Southeast Asia, your own bond market might look different, but we're looking at the largest bond market on the planet, and anyone can invest in a US 30-year bond, and it is clearly going up and to the right. The third asset class on the planet is companies. And I said there's publicly traded and privately traded. For the most part, people buy the publicly traded ones. This is the largest and most liquid and most followed stock index on the planet is the S&P 500. This zooms back. It gives us data back to 2006. So right about a decade, a little bit more. And clearly it is going up and to the right, which is kind of the same thing. But this is going higher. This is total returns, which means this is the price which includes dividends getting reinvested. So the third major asset category on the planet, which is stocks, is going up. So real estate's going higher, stocks are going higher, bond price is going higher. We're talking major trends here, okay? And then lastly, the last asset class I want to look at is currencies. And again, there's lots of currencies. But again, the biggest traded currency on the planet happens to also be or reside within the US. And since mid-2014, which is here, it has been going up. And really since 2011, it's been going up. So the biggest currency on the planet is also going up. Now, the reason I'm using the biggest currency and I guess real estate area and stock market and bond is because anyone can invest in those, right? If you're an Australian um, owner of a company and you live in Adelaide, you can still buy the U.S. stock market. You can still buy the U.S. dollar. You can still buy the U.S. bond. Like the nice thing about that is they're very liquid, and almost every country on the planet has some form of an exchange traded fund that you can buy. Now, I'm not saying you should buy. I'm just showing you the assets. I'm just pointing out what's really obvious, that there are only 4 asset classes to buy on the planet. And if we look at the major or the biggest one in each one of those sections or sectors, I just showed you which direction they're going. Now, to point out the most obvious is going to be what my takeaway is for the day, and that is what is the most obvious. And to me, the most obvious is follow the price, know what the price direction is, and have the big picture of the price. It's about price, right? If anyone's ever been in real estate or purchased a house, in real estate they say location, location, location. To me, what's most obvious as far as investing is price direction, price direction, price direction. I could drop the word direction because if you have a nice 10-year or 20-year price chart, your brain will naturally see the direction because we have pattern recognition brains. So guys, this is just another step in helping you protect your portfolio and your future. Until next time, this is RC Peck. Hey guys, thank you so much for being in my life in 2016. Here we are, the first week of 2017. February will be starting before we know it. We'll be halfway through 2017 before we know it. And I'm super excited about my group coaching program that I'm starting. And I've hired some of the best coaches that I know on the planet to help my, I'll call them students, finally get that clarity, finally grow that one number. It's a number that almost no one ever talks about. And it's one of those obvious things that once you know this number, right, once you know how to grow this number, once you can plug the leaks that drive this number, then everything changes in your life. And this is something that is bigger than the stock market or the real estate market or saving or growing. It is meta. It is above all of that. And it's that one number that determines everything in your life. And in this group coaching that I'm building and starting, it's about knowing what that number is, having clarity around the direction of that number, and knowing what the 3 main inputs are of that number. And once you have those 3 and you know how to manage them, which by the way is super easy, then everything starts to change in the person's life. Again, this is bigger than just stock picks or the stock market. This is about getting the big picture right, because if you get the big picture right, you get everything right. And it is obvious once you see it, but it is kind of difficult to see if no one's ever positioned that or kind of framed it that way. So anyway, things are going so great. Thank you everyone who I've had conversations with, and we are doing so well and moving forward. If you find yourself wanting to have this be kind of the breakout or breakthrough year in gaining that security, getting that freedom, then it's going to be one of those breakthrough strategy conversations that both myself and my head coach, Sean, have been having with people. That is going to be the difference that makes a difference in your life. You guys take care, and I'll speak to you soon. All right, bye.